No, it's just the same. It's sitting with what we're doing with China. It's, I don't make these decisions myself, and the group as a whole, um, still scratching their head about this, what's going on, politically in China, and how it's going to assert itself in the Chinese stock market and regulation. Um, how that would impact on India, I don't know. So we've just that whole sector, the tactical shift has been kind of on the sidelines for the last several months, and I'm not sure when it'll happen.
Okay, thank you. So I'm just writing that down. Okay, so I wondered. So another thing we've looked at this year is whether or not family offices are using leverage in their portfolios, and quite a number of them are. But we find sort of that they use it in different ways in different parts of the world. So in the US and in Switzerland, for example, it's used really quite strategically. In APAC, it's used more to sort of juice up returns, for want of a better phrase. And
Right.
I wondered if you use leverage in your portfolios, and if so, how you use it and whether you've changed your approach to it at all in recent times.
No, we've looked at it in the past and considered it, but given our aggressive kind of all-in investment strategy now, we think having to leverage that further would be imprudent. If we were less, we had more less risk-off more risk-off investments than we have, then we would consider that. But we're very bullish as a family office on the markets and the opportunities out there.
Okay.
But don't want to add to our risk profile by adding leverage. And frankly, we don't have the type of stakeholders that are saying, if you're making 11%, why aren't you making 13%?
Yeah. Okay, yeah. And I mean, when you say you're very bullish, I mean, you've described the changes that you've made in the portfolio and so on. But I mean, are there any other sort of, are there specific areas of the market that you're particularly bullish about, or are you just generally bullish that this is a good time to be in equities?
I think it's a great time to be in U.S. equities. Obviously, there'll be some losers along the way, but there's just so much money flooding into the U.S. economy now, and with at least all the literature, the infrastructure bills, at least some form of infrastructure bill that's going to be coming our way. It's hard not to be bullish on the U.S. economy for the next 18 months.
Yeah. Okay, thanks. And what about private equity? We touched on that. We mentioned that just a little bit earlier, but I mean, do you invest much in private equity? And if so, what's your favorite route into the asset class? Do you favor funds of funds, or make direct investments, or a mixture of the three?
It's all three. We do some funds of funds for some of the older generation, if you will. But we've got two classes of other direct investments. Two of the family members have their own private equity funds that they invest in their industries direct to startups and Series A and B. And that's mostly in the software enterprise area, which is the areas they know. And so that's, since we have expertise within the family in those areas, we make those direct investments, and all the family various trusts are involved in that. And then we do a variety of in real estate one-off investments with some developers we know, are familiar with, and we've done a number of deals with them throughout the U.S. and recently actually in hotels and recreational areas.
Okay. And I mean, when you say recently, is that sort of during the COVID, during times of COVID, I suppose?